Boom, we are alive, ladies and gentlemen. We have another fantastic guest for you. In my search to learn more about what's happening in this new evolving decentralized finance sector, we have Ermin Nurovic of Dhedge. Ermin, how are you doing today?
Yeah, great to hear. Great to be here.
I'm
Thanks
glad to
for having
have
me.
you. Yeah, my pleasure. So let's just kind of get right to it. Dive in. Tell me a little bit about your background and what's Dhedge.
Yeah, so I have an engineering background, started in the oil and gas industry, which wasn't so exciting for me. I discovered crypto. I sort of, watched Bitcoin, fly by back, through the bubbles of 2014 and, Mt. Gox hack. And I discovered Ethereum, smart contracts, sort of realized this was a really, huge technology that had a lot of potential. I still sort of, sat on the sidelines, watched it, and then I realized I'd dabble into smart contract development. Realized this is kind of more for me. After an ayahuasca trip, I realized I needed to get out of oil and gas, and that was kind of a bit of an epiphany for me. And I jumped into starting a business. Kind of tried, doing think of it as liquidity mining in the real world, which ended up being really difficult. The backbone of that business was starting a retail fund, which ended up being really, really difficult and expensive and time consuming. And I knew it was going to be difficult, but it was just even worse than I expected. So Radek, who's the other co-founder, he was telling me this idea of a decentralized fund, and I was like sold straight away. And I met Henrik, and yeah, here we are. So yeah, so Dhedge basically democratizes hedge funds. Anyone can become a manager. As an investor, you can basically have a look, and it's very transparent. And yeah, the idea is you can park your crypto with the world's best managers, and it's provable returns and results.
Well, I love that the ayahuasca brought you here. That's always a nice little twist to the story. Now, for those people that maybe aren't as well versed in the financial sector, especially around hedge funds, tell us a little bit about some of the hurdles that it would take to open a normal regulated fund.
Yeah, so essentially, maybe zooming out a little bit, traditional finance, fiat currency, I call it dumb currency. It's not programmable. You can't put in hard rules. So say, if you wanted to start a fund, people would basically transfer ownership of their money to you. Now you're in custody of it. When you're in custody, it's depending on how much, you've raised, you all of a sudden have this incentive to go, hey, I don't really want to, invest this money. Why don't I just escape to some island and, live out my days, which happens. So what you need is like a whole lot of regulation and audits and middlemen basically to take hold of custody, which are then licensed under the specific jurisdiction. And every jurisdiction is different. So depending which countries you want to operate in, and then it becomes really expensive and very time consuming if you want to, get your own licenses as well. And what you end up with is talking to these people who don't really want to talk to you. They're kind of like already, making enough money, and they think you're a small fry. And so even getting started is extremely difficult. Yeah, that's the short of it. But yeah, very painful process.
Yeah, I recently been looking into the costs, and for an average fund, just for those of you that don't know, you're looking at probably like $80 to $90,000 in startup lawyer fees, and then maybe an extra $50 to $100,000 annually just to keep that corporate paperwork going and make sure all your I's are dotted. And depending on which jurisdiction you're in, if you're in the United States, you would have to file with the SEC within 10 days of raising funding. So it's a very difficult game to play. And again, just like I think, one of the people don't really often recognize this, but even as like with accredited investors, they've put these massive hurdles from someone just either A, opening a fund, or B, also investing in said fund. So tell us a little bit about how Dhedge works, and what stage you guys are at in terms of building and development.
Yeah, so Dhedge is built on Ethereum smart contracts. So the way that works is, an investor is always in custody of their own funds. All that happens is, the investor can give permission to a manager to trade their funds. So it's a non-custodial solution. So yeah, the smart contracts were audited. We did a couple of testnet competitions to sort of test out the system and see, figure some of the things out that we wanted to test. And yeah, we launched a few weeks ago. We're seeing a lot of organic growth already, and yeah, we've got a lot of things planned coming up.
Now, I'm a big fan of Ethereum. I'm actually wearing my Ethereum t-shirt today. I feel like a little bit of a fanboy. We've got over like 500,000 locked in the new ETH2 contract. One of my questions lays around the idea of this custodial. So let's say the manager, from the manager's side, do you guys offer leverage trading and derivatives? Are there a way to do that through the contracts yet, or is it just simple buy and sell type management at this point?
Yeah, so maybe the layers are, there's Ethereum base layer on the bottom. On top of that, we're actually built on top of Synthetics. And for those who don't know, Synthetics, offers crypto derivatives, which means that, these are assets that represent, maybe they represent Bitcoin, maybe they represent Ethereum, but are actually, are derivatives, and then they're based on Oracle prices. What that means is that, we can trade without any slippage. So a manager could move, millions of dollars around, and basically there's zero slippage there. And the other thing that's cool is it means that we can have, the managers can take short positions, or what we call inverse assets. You could have like inverse Ethereum. Maybe, right now there's a run up in Ethereum, but maybe you think it's, that's it, we've hit the top. Or there's going to be, like a bit of a correction, and managers can actually take advantage of that in ways that is not really easily possible with some other platforms. Leverage, currently, Synthetics doesn't have leverage, but they are working on futures and all sorts of products. So we're basically, following their roadmap closely and working with them as they release new products. Will enable them on Dhedge as well.
So I'm a little bit of a layman when it comes to synthetics. I mean, I can grasp the idea. It kind of reminds me of colored tokens back in the day. Can you explain to us a little bit how synthetics works on the Ethereum chain?
Yeah, I'm still trying to sort of figure out, the easiest way to explain it. But yeah, essentially, these are assets that are backed by the Synthetics token. So there's collateral of Synthetics, and this is like the debt pool, what they call it. So essentially, you can stake your Synthetics and you can mint synthetic USD. And all of a sudden, this asset is in this ecosystem, and you can trade it with any other synthetic asset at basically zero slippage. So yeah, if you, for example, you trade into synthetic Ethereum, you have this ETH, it goes up in price, you trade it back to synthetic USD, you turn a profit. The counterparty to that are the stakers in the pool. With that said, Synthetics has like trading fees, and they sort of make it up with trading fees, as well as some other reward systems that Synthetic has.
So in the future, are you guys planning to offer more of the exotics like leverage, or the kind of the futures contracts that Binance now offers?
Yeah, that's right. So Synthetics is working on futures. They've just demoed it in their recent call. So there's no, they haven't, committed to a timeline at this stage, but that is coming along with, optimistic roll-ups, so layer 2 solutions to really, speed up the trading and lower gas fees as well. So I expect, next year, all of this will open up. Everything that we're seeing, and this is like a trend, everything that we see on centralized exchanges just, goes decentralized, becomes more efficient. And yeah, it's great.
Yeah, it's an important one too for those people that don't know, especially with the exotics, like options or a future contract is a great way to basically have insurance against the rest of your portfolio. And you generally would want the option to expire out of the, like, not in the money technically, because things were going the way you had intended to. So these exotics, I think, are an extremely important part of an asset management portfolio, or a hedge fund portfolio's like toolkit, basically. Now, I wanted to branch out here a little bit. So, with Ethereum 2.0, we've got these new kind of scaling solutions like ZK rollups or snarks or some of the plasma sharding, which already offers a much higher transaction speed. Are you guys looking at other chains as well? Like, are other layer one protocols enticing, or do you think Ethereum, like, I guess if I were to put it into one question, would it be Ethereum killer, or is Ethereum unkillable now?
Yeah, it's a good question. I mean, I just have a personal opinion on this. I'm not like, I
Personal
don't know how
opinions are
strong my,
welcome.
yeah, I'm not sure how strong my conviction is. Anything can change. I mean, the way it's been going so far, there's a lot built on Ethereum. As a developer, the tools on Ethereum are really good, which is really important. That means you bring in, there's like a flywheel effect where the tools are really good, and there's lots of other products you can build on top of, like what we've done on Synthetics. This isn't easy to do on another chain. So you go, well, it makes sense to build on Ethereum because that's where the users are. There's a strong network effect there. But then you go, well, the gas fees are really high. We can build this much cheaper on another chain. But at the end of the day, if it's difficult to build on top of a different chain, and if there's a very small number of users, that's really difficult. So I don't know. I think if I was building another chain, you'd almost want to have some exclusive product that's only on this chain, not on Ethereum. That's much better than what's already available on Ethereum. And then you can actually start drawing away some of that user base. But at the moment, for me at least, it doesn't look like that's happening. I could be wrong. I don't know. What do you think?
Well, yeah, I'm the last few days specifically, as I've done more research into Ethereum and the virtual machine effectively, I started to become really bullish. Now I was hyper bullish on Ethereum because of its technical space. For anyone that's in the Arcane Bear family would know we were looking at a very bullish setup since March effectively. But technically speaking, I'm not a developer, I'm not a coder, and so I don't really know. I'm just happy when my keyboard works, etc. Part of the thing I think that's a growing gap too is this difference between the people that can understand code and develop it and the average person. What would you give? What would be your advice for people that don't know how to code? Do you think it's important to know how to do over the next 10 years, or is there enough people doing it that you guys got it covered?
Yeah, I think my advice would be like do what interests you. For me, I was just drawn in by going, hey, I can easily, build, this on top of this thing, and it's global from day one, and people can just interact with it, and it can have real impact. Like that for me is huge, and it doesn't matter if that's like coding or if it's playing music or whatever. It doesn't matter if it has a lot of meaning to you, and I think that's the most important thing. Yeah, I mean, certainly the world seems to be going this way where you have the skills that you can leverage, like coding, and there's you can be a junior coder, you can be really senior, and you can be 10 times better than than the next person. And that's really valuable, especially today. But yeah, I think if you don't enjoy it, then it's just difficult. For me, it was just like a no-brainer. I would do this after work. Yeah, I have no problems with this.
Yeah, that's a great sentiment. Follow what you're passionate in. If you happen to be interested in these things, it's a very lucrative space. I wanted to take a look at your guys' site here. Let me see if I so I've got your guys' site here open, and we can see that there's a few. I haven't connected my wallet or anything yet. I just kind of want to show everyone while we're on the call. So basically, I could sign up as a portfolio manager, although until those newer toolkits come in, it seems less enticing to me, personally speaking. Options are extremely important. So are futures contracts. And then you've got, so let's look at Hopium. So Hopium's got $116 of an investment in here. We'll cancel that. And then he
Yeah,
holds more than 50% of his pool. And you can see the entry, exits, the performance, and the management fees. I kind of like where this social aspect of following managers is going. Like eToro had this in like the copy investors,
yeah,
etc.
yeah.
One of
And
the
maybe I'll just interject here. What's
yes, please
amazing in
do.
this is this pool that you have open here. We give an option where people can link their managers can link their Twitter account, And, this person's, hasn't, it's like basically a meme account. And when you look at, if you scroll down a little bit, he's making a bunch of posts and sort of poking fun at himself. But what's amazing is this guy's making great trades, and he's attracting capital, and it's just really great for me to see anyway.
Yeah, this is one of the dangerous parts about this is it's really the length of someone's trading. For anybody out there that's ever read a book by Nassim Taleb, you would know that you can succeed by sheer randomness and luck alone for quite a long time,
Exactly.
especially in the
Exactly.
beginning of a bull market. Everybody looks like a genius in a bull market. But
No, it's a really good point. Yeah, yeah.
um,
I guess what we can say is we've been up and running for not too long, and in time you'll see what is just random luck,
yeah.
and who's actually adjusting for risk. Who can actually if you have a bear market, then who can actually go backwards as well and still hold positions or make money.
Right. So that was kind of actually one of my next questions was, can you tell me a little bit about the side of the LP, so the liquidity providers for these pools? What does their side of the contract look like? Can they exit at any time? Are there lengths to the way that they're investing in each pool manager, or is it just a simple in and out contract?
Yeah, it's an in and out contract. So yeah, again, the investor has custody at all times. We have, however, within 24 hours, if you want to invest and exit within 24 hours, we've set a fee. That's kind of more for technical reasons and security reasons. But yeah, essentially that's all it is. I will say, because we are sort of built on top of synthetics and it's sort of interacting between multiple contracts, including Chainlink, gas fees are a little bit high. So, for smaller investors, I'd say, it's probably not, ideal. But yeah, we're working on this at the moment.
Yeah, I've when I first started getting excited about DeFi, one of the things I got excited about was a decentralized venture capital fund, like a launch pad, effectively. I know this is much more like point to point type trading. Um, Now, one of the have you guys gotten much feedback from people who are traditional managers as it is?
Yeah, we have, and in fact, on the platform, we do have, at least one that I can sort of talk about, and they're very much looking to use this as a tool to sort of, and it's hard to say. We're still trying to, find the market. Dhedge can be, you can attract capital and you can take performance fees, so it can be profitable for managers who make good trades, but also it can be used as a sort of marketing tool. So you can actually raise your profile, and whether your crypto Twitter or your traditional fund that wants to get some attention in the crypto space, that's possible. So there are two types of pools that managers can make. One is a public pool; anyone can invest. But for managers that are more conservative, and maybe for institutional managers, you can make a private pool. So the manager can essentially whitelist addresses and sort of decide who can enter the pool. And behind that, they can have whatever processes they like.
Yeah, I mean, it's probably not the biggest market right now today, but this is definitely a space that I see growing more and more as time moves on. Just because of simply for the regulatory hurdles to opening a fund. I can't, like, if you're talking about hundreds of thousands of dollars of upkeep on a yearly basis, that alone is quite ridiculous. Now, this is,
Yeah.
I guess, a regulation question. What do the lawyers say about these types of contracts in terms of management and expectations of gains from the product?
Yeah, I mean, behind Dhedge is a DAO, which is, decentralized organization. So we can't, the DAO is, I guess, not in any jurisdiction. So we can't really make any claims. But certainly, I think each manager should sort of assess their risk. I will say though that the regulatory question, just in general in DeFi, is a really, I think, important one, and maybe somewhat a misunderstood one. There's a lot of products. What about borrowing and lending? Well, don't you have to do credit checks? Well, no, you don't, because it's backed by collateral. It's there. It's provable at all times. So the risks are completely different. A manager can't, escape with your funds, but you can have all the regulation in the world for each jurisdiction in DeFi, and you can still wake up tomorrow and the funds will be gone because maybe there was a smart contract bug, there was a hack.
Yeah, we call those dumb contracts.
So the problem, the way I see it, is the regulators, they need to sort of, it's a completely different set of risks, and smart contract risk isn't covered in this nice box of traditional finance regulations. So in my view, it doesn't actually provide any safety for the biggest risks in DeFi, in particular smart contracts. So until you get regulators actually, reading smart contracts, and maybe this comes back to understanding code, and approving them, or setting up some sort of systems around that, then it's for me, it doesn't make much sense. It's almost pointless.
Yeah, there's a big gap. I think the Howey test was originally written in like 1929 or something. It has not been updated yet since then. We live in a totally different world from 1929. Now, obviously, regulation is one of the hurdles that we can overcome with this sector, and also one of the gray areas where we don't know too much about, because they're slow. Their governments are generally reactionary. Is there an internal Dhedge token, and how's the token used on your guys' side, if there is one?
Yeah, there is a Dhedge token, DHT. So at the moment, we're saying that it's a governance token. We haven't released the full details around that yet. But essentially what's happening right now is, Dhedge, has an admin fee, which comes out of the manager's fee. So managers can set whatever fees they like, and a percentage of any good performance, any returns that the managers make, Dhedge, takes an admin fee. And the way the fees are taken is by, the DAO will take a stake in these pools, and what we end up creating is a pool of the best performing pools, a pool of pools. So essentially what we're talking about at the moment is setting up governance around this new asset class.
Yeah, a fund of funds. I've heard this one before. I think there's so many unique ways that one could go down these, I guess, kind of these rabbit holes. From the manager's side, when I'm I jump in as a manager and I'm operating funds, how often are you finding people already moving towards the more traditional, like 2 and 20? Are most people setting up by the standard terms, or people throwing out, they're like, yeah, we're 5 and 50? And then lastly, as an adjunct question, are you guys in or going to be incorporating kind of algorithmic trading from that we could incorporate and build strategies that kind of run on their own in the background?
Yeah. So at the moment, we don't have any management fees. So there's no, at this stage, there's no fee that the managers will just accrue regardless of performance. So the first part is always zero. But for the performance part, there's a bit of everything, I guess. The performance that we display is, fee adjusted. So what you see is the manager's performance after the fees. And we ensure that every time an investor comes in, if there are fees to be taken, the fees are taken. And this, again, is all handled by smart contracts. And sorry, what was the second question again?
About like algorithmic trading, like building strategies in the background.
Yeah, so what we have is a bot SDK. So essentially, it's a piece of code that if you have some basic coding knowledge, you can plug in and you can sort of set up some rules. So that can be like a rebalancing strategy, or you can set up more complex strategies if you like, or we're even talking about limit orders, which is also something that Synthetics is working on. So yeah, there's a whole bunch of stuff that's possible. So we've kind of given open source this building block for bots, building bots on Dhedge, and people can just sort of take it and do whatever they like with it.
Yeah, one of the reasons why most retail traders lose out is because they're human. they, they make
I
mistakes.
can I
We
can
do,
relate to that.
yeah, human nature. I mean, people that are good traders become good at it because they are able to do something that not every human is good at doing, which is usually the opposite of what you think you should be doing, which is you buy things when they're very low and depressed, and you sell them when everyone's euphoric and high about it. It's you'd think it would be so simple, like, buy low, sell high, but it goes against human nature, and that's most of the reasons why I think traders mostly fail. Like last time we were chatting, we talked about Jim Simmons, which is one of the most prolific hedge funds on the planet. He's outperformed Ray Dalio, Warren Buffett, George Soros, and by like 2 to 3 times higher than all of them. And they're at first they got lucky, but their entire strategy became only bots, only algorithmic trading, and just let the computer do it for you, because you might be right one day, but you might have that same rightness but still be wrong. It's really interesting to see. So I'm glad to hear you guys are going down that route, because I think that's like the kind of, not quant funds in general, but people that are able to utilize the computer strategies will end up doing really well over the next few years. Ermin, tell us a little bit about how much capital, like what's the most funded manager on there right now? How much capital is he moving around?
Yeah, every time I look, the number keeps going up. So there is one manager, Convex Monster. He's on Twitter. He's got quite a bit of a following as well. I think he's pushing maybe almost 180, maybe 190K now, US. So yeah, he's, from what I've seen, like from his trading, like he's very conservative but still making really good returns. And yeah, there's not much downside so far that I've seen. Like last time I checked, he jumped into US dollar. So he's very careful, with the funds, which is also nice to see.
Yeah, I hear. Okay, so in the portfolio, is the alpha the dollar then, or are you guys, or can you have like Bitcoin as your alpha of the fund?
Sorry, what do you mean by this?
So for me, when I manage my portfolio, I'm always measuring about, do I have more or less Bitcoin from that trade, not dollars.
Got it.
Are they alphaed in, like, are you using the dollar as your alpha stock,
Yeah,
your Bitcoin or
yeah,
Ethereum?
we're using the dollar at this stage. I think what we're going to do is we'll sort of transpose this when people look at the charts, maybe with the ETH price or maybe with the Bitcoin price. Then that'll sort of give a clearer picture. Is this person actually outperforming the market? Would I have been better off just being in Bitcoin or being in ETH?
Yeah, that's such an important one too. People have it's hard time to understand. We're like, oh, but this other asset's gone up 30%. Yeah, it's like, well, that's versus the dollar. It's not.
Yeah,
If we're measuring in Bitcoin or something, it could be a drastically different outcome in how well you performed.
yeah, and it's like, for me, like you said, human nature is to just trade and buy high, sell low. For me anyway. So yeah, it's sometimes best to just buy an asset that you have strong conviction in, and I guess hold until maybe that changes. But yeah,
Yeah,
sometimes that works better.
yeah, 100%. Being able to do it properly takes a whole level, a whole level of skill set and meditation that I don't think most people normally practice. Um, Ermin, we're getting close to the end of our call. I wanted to keep it a short one today. Can you tell us some of the things you're most excited about, and kind of what the future roadmap of Dhedge looks like over the next 4 quarters?
Yeah, so at this stage, we're looking to roll out what we're calling performance mining. So we're aware of, I guess, in DeFi, liquidity mining, where people can provide liquidity for a token, and they're rewarded in that token. So when you help the protocol, you get rewarded in the ownership of the protocol. So what's valuable to Dhedge is asset, I guess, capital in the best performing pools, and that'll be most profitable for investors, and will strengthen the protocol even further. So performance mining is something where investors will be able to invest in eligible pools, meaning good performing pools. and they'll be rewarded in DHT. So what that should do is that should boost capital on our best pools on the platform, and then sort of have this flywheel effect. After that, we're looking at native staking for DHT, and this is kind of what we talked about a little bit earlier, about the governance over the over the protocol as well, which I'd like to talk more, but yeah, in time.
Yeah, once you guys go into the more beta stage of because you're currently in alpha, right? Like what we looked at on the site is alpha. Is that a test net, or is that that's fully functional right now?
Yeah, this is Mainnet. So yeah, we've already done a couple of testnet competitions. So yeah, we're in Mainnet now, and contracts audited.
Okay, fantastic. Yeah, I wanna give it a try when you guys have some more of the exotics in there. So it's fun to play around with, because those are my favorite. Then they're the most rewarding in the least amount of time. Ermin,
And risky.
Yeah, well, if you don't play safely, correct, absolutely correct. Ermin, I've had a great time chatting with you, and I'm really excited about what you guys have built here, because I myself personally have looked at the costs of opening a fund, and it's ridiculous. I mean, special venture vehicles or like single venture vehicles are a little easier, and you could go maybe in the Caymans, and you could bring the cost down to like 50 grand or something like this if you're out of St. Kitts and Nevis. I don't know, but it's still a hassle when all you're trying to do is build something. You know, I've heard of people going down this kind of like exploratory route where you raise funding and we're like, well, we don't really know what we're doing, kind of to just help sidestep the idea of actually managing a fund, etc. So it's a very interesting topic, and I think there's a lot of room for growth in this sector because of those hurdles and regulations that allow most people not to play with stuff like this. So I think you guys have a bright future ahead of you. I should shout out to Chris for helping us find you guys. I want to have you guys back on in the future too, when some of these exotics come on, so I can play with it, because again, I think this social aspect. I don't know. Did you see the tweet that CZ made the other day about the guy?
Oh, you just got on mute.
The guy, did you see the tweet CZ made about the guy who had made like $17 million trading? And then if you look in his account and you go back, it's like all-time loss, 21 million.
Wow.
It's funny. I don't think I think he just saw like, oh, here's the top performer of the day, we'll share that, and not to look at the rest of his account.
How to make $1 million, start with 10 and lose 9.
Yeah, exactly. That's such a common scenario in this industry. Ermin, it's been a pleasure chatting with you. I look forward to the next time we get on the phone. For all of you that are new to the Bear family, give us a thumb up, subscribe to the channel, follow Dhedge on Twitter. All of their links and all that fun stuff will be down below. If you have any thoughts or questions, you can ask them on Twitter, or you can leave them in the comments down below, and I'll do my best to try to help answer them. I'm sure maybe Ermin will drop in there and help as well. And we will see you guys again on the next episode. Ermin, thank you for joining us.
Yeah, thanks very much, Tio. It's been real fun talking to you, and yeah, we'll have to do it another time. Yeah, I look forward to it. We'll line up a date when things move forward. Thank you. We'll see you guys again soon. Thanks.